What's going on, team? Welcome back. We're starting off a series on basically how to start trading as a complete beginner. These are going to be step-by-step videos. We're going to do a few of these to basically get you guys jump started in the overall market, especially when you're trying to teach yourself. There's a lot of YouTube videos out there, but there's no real guide step by step showing you, hey, this is what you need to do, or even some type of structure for you to follow. So hopefully you find that here. Make sure you like and subscribe early. Make sure you guys hit that bell notification icon. This way you guys can stay tuned with the upcoming videos, right? So before we get started, trading is not a get rich quick. Make sure you guys take the time, get a notebook, especially when you're watching a video and you want to learn this craft where you guys could see people on Instagram, people on the news making tons of money within minutes, within days, that you could probably work all week to try to make X amount of dollars, and you're seeing someone make it in like 5 minutes or less. That's what really draws us to it, especially the money. That's what draws us to it. But overall, the money is one thing, but learning the craft is number one, right? So make sure you guys take this seriously. Especially when you want to learn how to trade, you want to make sure you take it really seriously. I always suggest my traders to get a notebook and start journaling your trades. And we'll get into that later on, but you always want to get into the mindset of taking notes, right? So just want to make sure you guys know that at first. First things first, we're going to start off with vocabulary, right? So as a beginner trader, vocabulary is going to be very, very important, especially if you don't know what people are saying, especially if you're in a group chat. If you're in my group chat, we may be using words that you don't understand what's going on and you're trying to follow along. Even if you're not trading, you still want to understand what we're saying. So, number one is bullish. That means you're more in favor for the stock to go up. So, if you're looking at Tesla and I say, hey, I'm bullish on Tesla, that means I'm in favor for Tesla to go up. Number two is bearish. That means that I'm more in favor for the stock to go down. If I'm looking at Apple and I say, hey, I'm bearish on Apple, that means I'm in favor for Apple to go down. Number three, day trading, right? Day trading is basically you're buying and selling within the same day. Could be hours, could be minutes, could be the whole day. So I'm day trading. I'm getting in and out within the same day. Number four, swing trading. Swing trading means I'm holding the stock for a few days, months, or maybe years, right? So I'm holding it with intentions to sell it at a later date. Number five, scalping. That means you're buying and selling within minutes. So it's day trading, but on a much quicker time frame. So you're basically in a stock for maybe 1 minute, 3 minute, 5 minutes. That's called scalping. Number six, going long. That means I'm taking a bullish position on the stock. I got into Tesla and I say, hey, I'm going long on Tesla. That means I'm betting on Tesla going up. And as Tesla increases in stock value, I am getting paid. Number seven, shorting, taking a bearish position on a stock. So if I say I'm shorting, let's say Microsoft, that means I'm making money as Microsoft goes down in stock price. So shorting and going long, a lot of people don't know that you could even short stocks. You could make money going short on stocks or make money as the stock decreases in value. Some people say, hey, whoa, the market is dropping. You must be losing money. No, I'm a day trader. I'm in and out and I'm basically betting against stocks, right? Number eight, nine, and 10. So when you're buying and selling, right, you're literally buying from someone and you're selling to someone, right? The stock market is basically your broker is the middle person within that deal, right? When you press buy, they rush and find someone to basically purchase shares for you. When you sell, they rush and find someone to sell those shares to, right? And literally, we could actually jump over towards a live chart right now. You guys could see this is time in sales, basically showing me live on how many shares people are buying and selling. Obviously, red would be selling. You can see someone sold like 100 shares down here, and someone just bought 340 shares, right? This is very quick, but this is actually people actually buying and selling, right? So let's jump back over to the vocabulary. Bid is the amount of money a buyer is willing to pay for a share of stock. Ask is the amount of money a seller is willing to pay for a share of stock. Think about the stock market as like Facebook Marketplace, right? Somebody posted, let's say, a toaster for 20 bucks. You're like, hey, I want to pay $19, right? And then the difference is going to be the spread, right? Difference between ask and bid is going to be the spread. Now, there's different ways to trade the stock market. You could buy shares or you could do options, right? I'm an option trader, so you're going to hear a lot of option references throughout these videos. So option trading is basically you're making a contract with your broker stating you're going to be buying a stock and selling it within a certain time frame. And if the stock basically goes up and down between that time frame, you make money, right? So if you want to buy an option contract, you could either buy calls or puts. So buying calls means that you're taking a bullish position on the stock, meaning that as that stock increases in stock price, you'll basically gain money as the stock goes up in price. And puts means that you're basically taking a bearish position on the stock, right? So why would I do options, right? Options gives you the opportunity to buy stocks like Amazon, Tesla, for a fraction of the price, and you get paid more if basically if the stock starts going in the direction you predicted it to go in X amount of time. So options gives you the opportunity to use less money and make more money than if you should just buy a stock and it went from 10 to 15. If you was to buy options, that 10 to $15 move, right, that the stock made, you may get over 100% profit instead of just like that $5 profit you would have got. So very crazy with options. So we'll teach you about options later on in these videos. Number 14, right? When I choose an option contract, I have to tell my broker, when do I think this prediction is going to happen, right? What's the expiration date? So expiration date is basically the day your contract expires. And number 15, the strike price is basically the name of the contract you selected, right? I gotta pick a contract. What day is it going to expire? X, Y, and Z, right? So we'll learn more about that later, just giving you the basics of what options are. Number 16, very important, right? Volume. Volume is the number of shares traded between buyers and sellers between a certain period of time. So volume, I like to think of volume as it like a party, right? If you're going to a party, you always want to come to the party a little bit late, right? Same thing with the stock market. You don't want to be like the first person at the party because there's no one going to be there. So when you want to trade, same thing as going to a party, you want to go a little bit later. This way you get high volume. Why is that? Like I said before, when you're buying and selling stocks, you're buying from someone and you're selling to someone, and you always want to make sure someone's on the opposite side to actually accept your shares. So we like to trade high volume stocks, right? Stocks that a lot of people are inside of, right? I like to think of volume as the amount of people that are inside of that stock at any given time, right? Um, if you think of volume on a broad scale, not all stocks have the same volume. So certain stocks may attract you more than other stocks, right? So certain stocks may move slower. Let's say if I'm trading McDonald's, I may not get very quick movements, especially as a day trader. I want to make sure that stock is moving quick so I could get in and out, and I'm not really married to the stock, right? But say if I'm trading something like the SPY or Tesla, you'll be able to get in and out very quickly, and that's where you hear people say, hey, the stock is very liquid, right? You could get in and out very quickly. You're not really watching the numbers print all day, right? Especially if you're trying to do this as a side thing, or you're just dipping your toe in there and you're still working. You don't want to be watching stocks all day, right? You want to be in and out within an hour, right? Or maybe less. Number 17, 18. So there's different types of accounts you could have when it comes into trading. Make sure you guys YouTube different accounts as well, especially these accounts right here, a cash account, which I recommend, right? Which basically gives you the availability to trade X amount of dollars that's in your account, right? So say if I have quote unquote $1,000 account, you could trade with that $1,000 that you have in there, right? Every day. So every day it would reset, and you have, if you made $200 with your $1,000, now the next day you have $1,200 to trade, right? So it's very good, as opposed to a PDT account, which is basically a pattern day trader account, which gives you 3 trades for the overall week, right? So if I buy and sell one stock, that's considered one trade. If I buy and sell another stock, that's another trade. Buy and sell another stock, that's a third trade, and I'm done for the week. And the most I could do is swing trade. So you're very limited. So if you're opening an account for the first time, which I'm gonna leave a link below for TD Ameritrade, that's the broker I use. That's the one you're gonna see being used throughout these videos. It's free to open. You don't have to put $1 in there. So it's pretty good to even, there's tons of platforms and stuff that's going on inside TD Ameritrade that allow you to back test stuff and see what track your progress and stuff like that. I'll show you guys that in later videos. But make sure you guys have the decision if you want a cash account or a PDT account. Number 19, ticker. So ticker is an abbreviation of letters chosen by a company to represent them in the stock market. So it's basically like a code word, right? So instead of saying Apple, you put APPL and then into the broker and they'll pop up. There's tons of tickers. It's going to be hard to remember all of them, but you're going to start remembering them very quick, especially the favorite ones that you like to trade, right? Number 20, a stop loss, right? So a lot of people say, wow, if you're trading and the stock goes against you, you'll lose all your money. No, there's such thing called as a stop loss, which is an automatic sell at your desired price. So I could get in at $10 and I could put my stop loss at 7. So now I'm basically risking $3, right? So make sure you guys use a stop loss, and I'll show you guys how to use one later on. But a stop loss is very key, especially when you want to be a profitable trader, especially if you want to protect yourself from risk and you're trading high volume stocks, right? You're trading stocks that are moving very fast. You always want to set a stop loss, right? Number 21, indicator, right? So indicators are beautiful. Some people don't like them. I like them. I never had an issue with them. Indicators basically allow you, or they're an application that you could add to your stock chart that helps you predict the overall direction of the stock. There's tons of indicators out there. These are going to be the top 2 indicators that I use. Number 22 is the RSI indicator. It lets me know if the stock is overbought or oversold, right? My favorite indicator. Overbought means the stock is a bad value, and that means the stock is more in favor for a drop. And oversold means the stock is a good value, and that means the stock is more in favor for a bounce. Now, 23 is the MACD indicator. This lets me know whether I should enter for a long position or a short position. And 24, I call it trade line. It's called EMA. It's a visual line that gives you the direction of the stock, right? Very gold right there. Now, before I let you guys leave, I'm gonna give you guys some basically trader mindset, right? Before you start trading, before you put $1 in the market, which is very easy nowadays, especially you have Robinhood and you have TD Ameritrade. There's a whole bunch of brokers out there, but before you invest any dollar in the market, you should have a set of rules that you're going to follow, right? Um, like we spoke about it before, the market is very glamorous, right? That you're able to make X amount of dollars in a short period of time, but you're not going to be successful if you're only thinking about the money. It's very odd, right? If you're only thinking about money, right, which is the reason why you're even watching this video, you're not going to be successful, right? You want to have a game plan before entering any stock, right? You got to know where you're buying, know where you're selling, but most importantly, know where you're cutting losses at, right? They have a statistic out there, you know, you guys probably heard it. They say like 90% or 80% of traders lose money, right? The reason is making money, right, can become easy once you know what you're looking for. Losing money, which is a human major flaw, basically, is basically not accepting that you're wrong, right? Accepting that you're wrong is going to be the hardest thing that you're going to have to learn in the stock market, right? It's easy to make a plan and then it's easy to follow your plan, but it's not easy to admit that, hey, my plan's not working. So it's you against the market every day. And if you can't accept your losses or accept that you're wrong, right, and keep your losses to a minimum and basically not lose a lot of money, right, and not blowing up your whole account, right, you can't make it as a trader, right? You got to understand that, hey, I entered here, it's not going according to plan. And now the chart's looking the opposite way, and I need to basically sell this, right? Tomorrow's another day. You're not going to get rich today. You're not going to become a millionaire today. The stock's not going to go up 3,000%, and then you're going to feel like you missed out. Even if it did, if you ever feel uncomfortable in a position that you're in, that you open, the best thing to do is to sell it. Number two, never trade a stock with low volume, right? If you guys remember from the vocabulary words, volume, right, is basically the amount of people inside of a stock, right? If I'm buying and selling and it's low volume, then I do not want to be in that stock, right? It's going to be very hard for me to get out. So I always want to trade stocks with high volume. Number three, never trade with unfavorable emotions, right? Like I said, trading is mostly like a mental game for yourself, right? So if you feel like, hey, I'm having a bad day, it's not a good day to trade, right? Don't try to force a green trade just so you could make your day feel better, right? Always trade in a clear mindset. Number four, stay away from stocks on earnings day, right? So the whole purpose of the stock market is we're investing in these companies. And then basically they're using our money like the bank uses our money, right? You put your money in the bank, it doesn't really stay there. They invest that money. Same thing with the stock market. I put my money in Apple, I put my money in Tesla, I put my money in NVIDIA or whatever, right? They use that money to grow their company, right? So if I'm giving anybody a loan, I want to know, hey, when am I getting my money back? What's going on, right? So that's what earnings is, right? It's every 4 months, 3 to 4 months, a company tells you what's going on with the company for the past 3 to 4 months and what do they see is going to happen for the next 3 to 4 months. This is probably one of my biggest turning points in the market, right? If you guys are from my chat room, you guys are probably laughing. I do not touch earnings at all, right? Earnings is like the biggest gamble in the whole stock market because you're entering a stock, you can't get out. The market is open from 9:30 Eastern in the morning to 4 o'clock Eastern, and earnings typically happens after that 4 o'clock. So you can't get out. You're in and you're locked in. And whatever happens, happens, and you could have your own notion on what you think that stock is going to do for earnings. And you could say, hey, Netflix had an amazing last 3 months. They had X, Y, and Z movies come out. They're raising subscriptions, and then boom, earnings happens. And then you can see that I'm traumatized, right? So, but then earnings happens, and then you can see that, wow, Netflix has the biggest drop of life, maybe $50, whatever X amount of dollars it drops, and they could say, hey, maybe the next 3 months is going to be slower for us, right? And we're not going to see any growth for the rest of the year. And that could drop the stock, right? So a lot of times the earnings doesn't drop the stock, right? That what they predicted the stock was going to do. But it's that phone call afterwards where they say, hey, our expectations are looking a little bit low for the next upcoming months. So earnings is a gamble. There's a way I trade them. I'll teach you guys that later. I like to trade them before they announce and after they announce. So now I'm not in any risk and I can read the charts, right? The charts are always going to tell you what's going to happen with the stock before it actually happens, right? So that's the beautiful part about when you learn how to read charts. You'll start to see, whoa, CNBC is saying something about a stock, but you're already in it because the charts were already looking a certain way. These people in Wall Street, they're reading the same charts that I'm going to teach you how to read, and they make their decisions on how the charts look as well too. Number five, cut losses as soon as the stock goes against your plan. We spoke about that already. Number six, journal your entries and exits, repeat good habits, and avoid negative ones, right? So that's where I started to see a big change in curve. I go through tons of marble notebooks. I'm still old fashioned. I write down where I enter, where I exit, and all that good stuff, right? So you always want to journal your trades, and you can see, you could write down, whoa, I got in because of this reason. I got out because of this reason. And the next day, just every day, just try to better yourself, right? Don't try to make too much of drastic changes, but every day you're in competition with yourself and make sure you try to better yourself. This way you could see better habits, right? And you're not repeating the same habits, right? If you're repeating the same habits, you'll never grow. Number seven, right? Which is the most important, right? Not really the most important, but very important as a trader, right? Let the moves come to you and don't chase the stock, right? Especially as a beginner, you're going to see things flying up and down, left, right. You're going to hear news coming out, right? But the best thing to do is when you're looking at the charts, wait for your best opportunity to trade, right? Throughout these videos, I'm going to teach you how to make a game plan. And if something is not looking accordingly to your game plan, to your good habits, if I know I'm good at something and I know I'm not good at something else, then you're going to stick to what you're good at, because that's going to make you successful in the market, right? If you come through it in the market, you don't have to know 10,000 patterns. You don't have to know different types of basically entries and stuff like that. If you're good at one thing and you look for that one thing every day, you will be successful. So hopefully you guys learned a lot. Leave a like on the video. Comment below, what are you trying to learn in this video series? And I'll see you in the next one. Peace and stay tuned.